the sound of the train that took me off to war.
Good evening, everyone. I'm Brian Trumbore with your nightly review for Wednesday, May 1st. It's 4:02 p.m. Eastern Time. Happy May Day. The Mets won today, snapping a 6-game losing streak, defeating the Miami Marlins 7-6 down in Miami. That's what I was watching this afternoon, not necessarily the Federal Reserve. Oh, I saw it as well. Anyway, the three major averages all finished down about 0.9%. Dow Jones lost 139 points to exactly 14,700. S&P 500 dropped 15 off of its all-time high set yesterday. It's now at 1582. And NASDAQ lost about 32.99, and again all three were down about 0.9%. Gold closed at $14.58. It's down $14. It was down a lot more earlier. Oil finished down $2.50. This is West Texas Intermediate at $90.90. I have more on that. Some big news in a bit. And the 10-year Treasury closed at its lowest yield of the year, 1.63%. It finished December 31st at 1.76%. Just a note on the completed month of April. The Dow Jones finished up 1.8%, S&P up 1.8%, and NASDAQ up 1.9%. Rather consistent again for the month of April. The last 3 years in May, the old sell in May, go away, the Dow in the month of May was down 6.2% in 2010, down 1.9% in 2011, and down 7.9% in 2012, and got off to a lousy start today. S&P Capital IQ, a look at corporate earnings so far for the first quarter, 70%, 70, of companies are beating on the bottom line, but only 43% are beating on the top line revenues, and it looks, at least with 2/3 of the companies having reported in the S&P 500, revenues appear to be up 1.8% overall. That's it. That's not good. The Institute for Supply Management Research, the ISM reading on U.S. manufacturing for the month of April came in at 50.7, down from March's 51.3, so very close to the 50 dividing line between growth and contraction. And of course, yesterday the Chicago Purchasing Managers Index came in at 49. That's not good. ADP this morning released its figure on April employment, and it showed a gain of 119,000 when a gain of 150,000 was expected. So that does not augur well if you believe in the ADP figures. Doesn't augur well for Friday's Department of Labor report on April employment. Right across the street, 50 yards that way, is the North American headquarters for Merck. They issued a pretty miserable earnings report today, guided lower for the year. They now expect revenue for the entire year to be down versus 2012, the same old theme. And Merck shares finished down $1.40. They're supposed to be adding hundreds of employees at the location across the street. For the sake of my town of Summit, I hope that comes about as they consolidate a bunch of regional offices. Good for our tax base. Good for the Dunkin' Donuts down below. Anyway, at 2 o'clock today, the Federal Reserve announced, after a 2-day open market committee meeting, that it was maintaining its bond purchase program of $85 billion a month in mortgages and treasuries, but it is prepared to raise or lower, and that was a difference in the language, raise or lower the level of purchases as warranted, specifically, quote, as the outlook for the labor market or inflation changes. But don't expect the Fed to change its purchase program anytime soon, especially with some of these lousy data points that we've had the past few weeks. It being Wednesday, it's the bull-bear ratio, investors' intelligence or lack thereof. Bulls 47.9, that is up, bears down to 18.8. So close to the 30-point spread between the two, which is normally seen as somewhat of a danger signal, though we hit that a couple months ago and it was not a danger signal. Okay, crude oil. This was a shocker out of the oil industry as crude tumbled to $2.50. U.S. inventories of crude reached an 82-year high. Inventories reached an 82-year high amid signs of an economic slowdown in the U.S. and China. The Energy Information Administration said stockpiles jumped to 395.3 million barrels in the 7 days to April 26th, the most since the government began gathering weekly data in 1982. And according to monthly data, inventories were last at this level in 1931. So we are swimming in crude, sports fans, and you would think the price of oil would take a little header from here, and that's only good, of course, for gasoline prices. Oil inventories rose 6.7 million barrels last week when the estimate was more in lines with 1.1 million. Total fuel consumption dropped 1.4% in the 4 weeks ended April 26th, the lowest level since January. That's fuel consumption. Gasoline demand slipped 0.3% over the period, and gasoline demand is now 1.8% lower than a year earlier. So that's another economic indicator. U.S. automakers saw sales of cars and trucks spike up again in April in the United States. It was the best April for the industry in 6 years. Chrysler's sales were up 11%, Ford's up 18%, and GM's were 23% higher. Toyota sales, however, were down 1%, and Volkswagens were down 10%. I was surprised to see that Volkswagen's mid-size Passat, which I think is a good-looking car, were also down 10%. An analyst with Kelley Blue Book expects U.S. auto sales for the year to be around 15.3 million, which would be a rise of 5.5% on last year. Follow up on the Apple bond offering, it ended up coming in at 17 billion, the world's largest corporate debt sale. And the yields, remember this was a 6-part offering, 3, 5, 10, and 30-year fixed notes and 3 and 5-year floating rate notes. Should have said 3, 5, 10, and 30-year bonds and 3 and 5-year floating rate notes. The Yield on the 10-year Apple offering came in at 75 basis points over the 10-year Treasury, or 2.41%. Again, this is yesterday afternoon. And the 30-year Apple paper was priced at 3.88%, or about 100 basis points over 30-year Treasuries. Overseas, UK factory a British factory barometer for April came in at 49.8 from 48.6 in March, so a slight improvement. London, Paris, and Frankfurt markets were up or down 0.3% to up 0.5%. I'll cover China in a second. In Greece, a general strike against tough austerity measures is underway. Trade unions calling for mass mobilization of protesters, it being May Day. It's another 24-hour job action expected to severely disrupt public services and transportation. The organizers are demanding an end to spending cuts and tax rises. More than 20 general strikes so far this year, I believe, have failed to halt the austerity cuts, and the government feels emboldened by the cautious optimism of international creditors. In Lisbon, the government said it would squeeze spending by €6 billion over the next 4 years, extending tough austerity measures. The plan implies severe cuts in government spending on health, education, and social security, and of course is going to meet fierce resistance from opposition parties and trade unions. Victor Gaspar, the finance minister, is excluding further tax increases, saying fiscal tightening to the end of 2016 would focus almost exclusively on spending cuts. Of course, Portugal needs to do this to continue to get installments of their bailout funds. Mr. Gaspar forecast the economy would begin to recover in 2014, but would contract another 0.6%, would contract 2.3% this year and grow slightly next year. Unemployment in Portugal is expected to climb to a record 18.2% this year and then 18.5% next year with all the spending cuts. Tony Barber of the Financial Times had the following bit, it being May Day. A collective howl of protest and despair will resound through Europe's streets and squares on Wednesday at the annual May 1 rallies, which in happier times celebrate the dignity of human labor. It is difficult to be festive when 26 million Europeans are jobless and economic recession blights the continent. For the first time in generations, numerous parents fear that the future living standards of their children will be lower than their own. Their sense of powerlessness is all the greater because in or out of government, Europe's center-left parties, once the formidable political voice of the organized working classes, no longer appear capable of fulfilling their historical mission as protectors of jobs, welfare, and social cohesion. Tony Barber writes, 5 years of financial crisis fueled by the excesses of reckless capitalism might have crippled the electoral fortunes and ideological credibility of conservative laissez-faire parties on the European right. Instead, the left comes armed with solutions that voters mistrust as impractical, expensive, or out of step with the times. In Germany, Chancellor Angela Merkel's poll numbers ahead of the September election have been slipping. Support for her Christian Democrats has fallen below 40% for the first time since December. However, this particular poll showed unchanged support for the main opposition, SPD, the Social Democratic Party, which is coming in at 23%, with the Green Party at 14%. Bottom line, if these current numbers held, Merkel would have to come up with a new partner, and that could be the SPD, which she had formed a grand coalition with before, for the 4 years up to 2009. In China, part of the slowing global economy, the government's official PMI, Purchasing Manager Index, on manufacturing for April came in at 50.6, down from 50.9 in March. So this is the National Statistics Office, which focuses more on state enterprises. HSBC, as you know, comes out with its own estimate, and that focuses mainly on small and medium business. HSBC's reading for April, a flash reading, was 50.5. So while this is growth, it's not a lot of growth. So that's another reason why commodities fell all over again. Copper hit a multi-year low today, and Australia reported a miserable number on manufacturing, a 4-year low. Very briefly, despite some comments seemingly to the contrary at his press conference yesterday, senior administration officials told the Washington Post that the administration, or rather President Obama, is preparing to send arms to the Syrian opposition and has taken steps to assert more aggressive U.S. leadership among allies and partners seeking to bring down President Bashar Assad. The administration has launched an effort to convince Russian President Putin that the probable use of chemical weapons by the Syrian government and the more direct outside intervention that could provoke should lead him to reconsider his support of Assad. Several factors have been influencing the president's thinking, according to officials. Partner nations such as Jordan, Turkey, Saudi Arabia, Qatar, and Britain have urged the United States and Obama to take a more active role in helping the Syrian rebels. Britain and France have also moved out ahead of the United States with calls for the European Union to drop its arms embargo against Syria, and indications that they are prepared to send weaponry. And Hezbollah basically came out and said that it is going to help the Assad regime. That's the first time it's made a formal statement like that, and that is not good. I'll be back with you tomorrow, Thursday. Keep the men and women of our armed forces in your thoughts and prayers. The British lost 3 soldiers yesterday in a bomb attack in Afghanistan. So we remember our very good ally, Britain. A little more George Jones for you. His funeral's tomorrow.
And the